Welcome back to Next Gen Investing. It's now time to discuss our under 30 name today, which has been actually one of note over the last month or so. That is Warner Brothers Discovery, with some rare pessimism today, really centered around the, of course, potential merger with Paramount Skydance. Joining us now is George Tsilis, the senior markets correspondent, to help us discuss more on really the likelihood and sort of the expectations that we actually see this deal or this proposed deal right now go through. So, George, take it away. I mean, what are you watching for here with Warner Brothers?
Yeah, okay, so I'm looking, obviously, the charts, Jenny. We've talked about this name quite often in the past maybe year or two, Warner Brothers now. And we talked about how the content catalog, legacy catalog in the studios business is very valuable. The challenge for the business had been the linear TV aspects, including their CNN and TNT broadcast networks. And the linear TV business altogether has been really a drag on some of these major studio companies like Warner Brothers. The streaming business has been successful with HBO Max. Now, the question is we talked about how there's a potential for unlocking value in Warner Brothers under multiple cases. One, they have a distribution deal with another partner. In this case, there's a lot of news right now of a potential, merger or acquisition by Paramount Skydance, PSKY, which basically has a very similar business model and has a similar problem with the CBS television linear TV business being relatively weak, Showtime relatively successful, and Paramount Plus when it comes down to streaming services. So it makes sense just on paper for these two companies to come together because essentially they could help combine their linear TV business, which is the struggling business, and of course reduce costs on that front. But the challenge right now, and there's some apprehension coming about with TD Cowen essentially downgrading the stock to basically a hold, and they've got a $14 price target because there's a lot of uncertainty in terms of some of the antitrust issues with these two companies potentially merging together. And that can come from the fact that if you look at Paramount and as well as Warner, in terms of their studios, they're two of the large five Hollywood production studios. The other thing that can do is create some unfair disadvantages, perhaps, from an antitrust standpoint to smaller studios that don't have the capital financing or the merchandising power that these combined companies would have. Then the other thing is reducing choice, because now Paramount and HBO Max are two separate streaming services. People have a choice on one or the other. If they combine them together, that would reduce choice, and most likely they would be able to increase prices for those who want one portion of that, or maybe combining both together.
George, what would you say to someone who asks, how do I know this isn't a value trap? I look at the revenue growth, it's non-existent. I look at Netflix and all it seems to do is grow revenue and does so way more efficiently. If I had to invest in content, why look at a fallen star when I can look at the one that seems to be, the star of real time?
Well, I mean, that's a great point to bring up. I mean, obviously Netflix has done extremely well from a content production standpoint, even a live streaming standpoint, and then of course digital distribution standpoint. And by the way, their strategy on the mitigating double logins or multiple logins has been very successful. Their advertising model has been so altogether their business has been successful, and they've really encroached on the streaming capacities for traditional studio businesses, Warner, Paramount, which have a great legacy content catalog. And if they do combine the two companies together, they could control that content catalog. And if other companies like Netflix want to stream their content, they're going to have to pay a premium to do so. So that's the whole premise behind the merger together. But there's also the element of antitrust and anti-competition, which I think is going to be a big challenge for the companies combined. But nonetheless, this is an interesting story. I'm just going to lay out what the market is saying. The market, if you look at Paramount Skydance and Warner Brothers, both the stocks are moving higher. That suggests to me that there are a lot of synergies and overlap that could be mitigated to increase profitability for both units, because both the linear TV businesses of both companies are struggling. And spinning them off individually would be a challenge because that what may not necessarily be attractive to other buyers out there, perhaps like Comcast and so forth.
Yeah, and that's a good point. I do see, I think, the duality of this sort of debate right now, and I think that'll be interesting to see how this unfolds.
Yeah.
Obviously, we could discuss it all day long, but we will get hopefully some answers in the coming weeks. But I appreciate it, George, and obviously looking at Warner Brothers today on a rare down day, as that name has made a 56% move to the upside over the last month.